Guys, Joel Frank here, market analyst for YouTrading, and in today's educational video, we're going to be talking about gold, and we're going to be talking about how gold sort of responds to macroeconomic environment or changes in the macroeconomic environment, and some of the correlations that you need to be watching when you're trading gold. So, as you can see here, since forming a really nice triple bottom actually in the months of September through early November, we've seen a pretty decent rebound in gold. Now, why is that? Well, since the beginning of November, we pretty much had a series of, well, actually today we had a slight upside inflation surprise in the US, with the latest PPI data not falling as much as expected, but still the latest PPI data we had out of the US today for November did decline still. And in October we had a big drop, bigger than expected drop in US CPI. We've also got a lot of people like chief executives at banks, economists coming out and being very bearish on the economic outlook for the US next year, because of fears that all this Fed tightening, the lagged effect, is going to send the US economy into recession. So pretty much the case for aggressive Fed hawkishness appears to have peaked. Fed hawkishness appears to have be easing. You know, the Fed later this month, they're going to do a 50 basis point rate hike, which is a slowdown on the last four 75 basis point rate hikes. So that Fed pivot feels like it's coming. So why does that result in gold bouncing? Well, the first thing is gold's got a negative correlation to the US dollar. And as you can see, for all the reasons I've just been talking about, the US dollar seems to have peaked, and actually since its September highs, it's dropped nearly 9%. So, you know, gold, it's priced, or the main benchmark for gold, for spot gold prices that people watch globally, is benchmarked to the US dollar. So obviously, in a fraction, when the denominator gets smaller, the value of the fraction rises. So that's the case with gold, rising because the dollar's weakening. Basically, a weaker dollar means more demand for dollar-denominated gold because it basically becomes cheaper, which pushes up its price. Another thing you need to be thinking about as well is the fact that yields in the US have also been falling, particularly longer-term yields, for all the reasons I've just been talking about, the US long-term economic outlook darkening. Now, yields and gold have a negative relationship as well, just like gold does with the dollar, because gold is a safe haven asset, or viewed as a safe haven asset. US government bonds are viewed as a safe haven asset. But gold doesn't provide any yield, whereas these government bonds do. So the more yields go up, the more relatively attracted people are to investing in bond yields as their safe haven asset, as opposed to gold. So when you see yields coming down, that makes gold relatively more attractive. But anyway, guys, that's pretty much some of the main things you need to be thinking about for gold. In terms of the outlook for gold, well, things potentially looking up for the precious metal. Hasn't yet been able to bust through these August highs. But if the current trends of the weakening US dollar and falling long-term US bond yields continue, as markets continue to pair their hawkish Fed bets and continue to view the US economic outlook as looking not very good, you would expect that at some point gold probably could break above the 1800 level, which is what it's been struggling with recently, and push on towards these highs. Next week, we've got US CPI coming out. Let me just show you the calendar real quick. Go to next week. Yeah, US CPI coming out. Like I said, PPI was a little bit hotter than expected, but if this CPI falls more than expected, as it did last month, then that could certainly inject some upside into gold, as was the case on the 10th of November here, when we saw that near 3% jump. And then we've got the Fed meeting as well. You got new economic forecasts from the Fed. You got a new dot plot from the Fed. Obviously, 50 basis point rate hike expected, and you got Powell's press conference. Powell's probably going to try and sound hawkish because he's trying to prevent a big risk asset rally. basically, on the idea of a Fed pivot, because a big risk asset rally makes it more difficult for the Fed to reach its inflation target, because a risk asset rally is a positive for the economy. But if the Fed is getting more pessimistic, you might see that in the economic projections. So if those are weak, then that could potentially be supportive for gold. But anyway, that's some of the things we're going to be looking at going forward. But yeah, keep an eye on those correlations that I was talking about with the dollar and yields. Hope you all found the video informative, and I will see you all in the next one.